Hey folks, and welcome to the Pipnotic Symposium for the 15th of January 2021. Today we're going to talk about some updates coming out in the software, and then we are going to continue and have a closer look at what's known as continuation patterns, which came in via the Discord channel. So thank you, King Waver DK, for that request. It's funny, like in the Discord channel, we have a few hundred guys in there, and I have a pretty good idea who a handful of the people are. But a lot of the handles and a lot of these names, I still don't know who the individual is behind it, which I think is quite cool because there's a certain degree of anonymity in the room, which I like, and so people maybe exploiting this anonymity to be a little bit more honest and ask questions that they otherwise would be maybe too proud to ask. So I really like that. Okay, the update. So what I'm doing currently with the histogram and the currency strength reversion algo is I'm working on an update. Something that's super important that I've wanted to add to the software is the notion of a trend. And so trends can be pretty difficult to assess. And so what I've figured out is that if I can take the histogram for a specific period of time, and let me just click on, let me have a look at this. Let's have a look at this. So this is just a chart. And this software down here that you can see, it's not available. It's just something I use for testing. It's kind of like a development. It's a dirty piece of code that I use to help me with my development. But what's important here is that it resembles more or less the currency strength histogram, but it's using less data, so it's less precise, but it's quicker. It doesn't require so many calculations. And this is what I'm using to test various hypotheses that I have regarding trends and histograms and stuff like that. And so what I've discovered is that we have something that's quite interesting. And let's just have a quick look at what I mean. Where we have, here is the histogram, which looks more or less like the currency strength histogram. And so what I'm doing is I'm using the histogram information to give me I'm using that to calculate an average, and the average is in the form of this orange line here, which we also have from the currency strength histogram and the currency strength reversion algo. And this has given me a directional bias, and it's a pretty good bias. Okay, and so you can see here that when we have something like the bias or the average below the zero line and the spike up in the histogram towards these buy and sell levels here, this is a really good indication that we have a downward trend and we have a deviation from that trend in the opposite direction of the trend. And so we're going to sell at extreme pushes higher in a downward trend. And so this is something that I want to work a little bit further on. Currently this is a simple moving average, but I'm going to try and implement an exponential moving average and see what else I can do to find some interesting results. But my hypothesis is that if we have the yellow line below the zero line, it will pull the band from the upside a little bit closer to the histogram, and if it is below, it'll push that an equal amount away from the zero line. Okay, so what I'm essentially doing is I'm subtracting the average from the positive line, and I'm subtracting it from the negative line. So we are actually moving it further away. And this is because in a downtrend you want to be buying much lower, and in a much lower and selling a little bit lower than you otherwise would, because if this is at the zero line, that would put the green lines like somewhere up here, and so price would really have to reach farther in order to find the sell. Okay, and this is a really good thing to do because in a downtrend, price isn't going really far up. It's just going a little bit up to an area of supply like the one we saw here. This is actually a beautiful setup. And then it's moving away because the flows are moving down, okay, which is protecting supply. So the supply is driving price lower, okay, and the demand is getting removed. And because the demand is getting removed, we want to put our entries much lower, okay, which is this is just giving us a really nice indication of what's going on. And what I like about this is it's limiting the entries that the algo and the histogram are going to tell us about. and it's going to wait for the entries that are much more higher quality. So this is something that's really exciting. I'm working on it pretty hard. I'm also going to implement this in the buy and sell zone algo eventually, and maybe in the supply and demand software. But I just want to focus for the time being, and so my focus will be in the currency strength histogram and the currency strength reversion algo trader. So that's where I am with that. It's a pretty cool bit of research, and what I'm seeing is that if you're selling in line with this yellow line just here on the hourly chart and above, I mean, we're seeing some really beautiful entries. So if we select this update here, this is probably going to be pretty flat. Okay, so you see here that we had a push to the upside, and then we saw this line begin to turn down. Okay, so when this happens, I mean, we are seeing the beginning of a sell zone. And so when you see this, the orange line below the zero line, you can see here, and we have an area of supply formed above price. This is a perfect setup. Okay, this is a very nice setup. The software told us where to sell. We had confirmation that we were in a downtrend, so the flows were moving lower, and that worked out an absolute treat. And you'll notice that these will happen more and more and more. And so if you want to buy, and you want to use the histogram as some kind of a visual indication of what you should be doing, this is forcing you to be patient and sit on your hands. Okay, which brings us to control patterns, which I will now focus on. Okay, so okay, I'm going to change into a different profile. This is my default profile, and this is the one that has two different charts. Here we have the supply and demand chart here on the right side, and on the left side I have my X-ray tool. It was called intra, now it's called X-ray. And the beauty of combining these two is that we have tons of information. Okay, and the beauty of the information that we're being shown here is that it enables us to focus on the buy side of the market and the sell side of the market, or the chart, I suppose you can say. And I've talked about this previously in the past. And so if I just mark those off, okay, so we have the buy side, which starts from the low, so the swing that goes up to the high, which is here. And then we have the low, so the red color, which is the sell side, which goes from high down to the low. And what this does is it forces us to focus on the correct side of the market. So when you see this side of the market here, when price comes down here, we can only buy in this side and we can only sell in this side. Okay, we're not allowed to buy at, let me change the color of this here from that color to, let's go white. We're not allowed to buy here. Okay, we are only allowed to buy at demand that is on this side of the chart. And why is this? Well, this is because this is the origin of this move to the top of the box. Okay, and so the demand is on this side of the chart. There's no demand here. The only thing that you're seeing here is a reaction to demand. And if we go back a couple of drawings, and you notice here, when price was up here, I could have actually changed the box. So let's assume that price is only here. None of this exists. Then we can draw the box a little bit differently. We'll do the green box, which is from here to here. Price went down. Now we have the red side of the box from here to here. Let's just assume that we're here. What is this doing? Well, this is telling us that price moved off the high and now it's moving down. Okay, price didn't react here because of something in here. It reacted here because we had an area of demand just here. We have this one here, we have this one here, we have this one here, we have this one down here. So these are the ones that we can look at. There's nothing to do here. So you're forced to focus on the price move that contains the demand. Okay, and everything on the other side of the chart, which is the sell side, according to this graph, is reactions to that demand. So there's nothing to do here. You wouldn't buy here. You wouldn't take this trade here. You wouldn't take this trade here. You would wait for price to move down to an area of demand which is on the correct side of the chart. So this one here. So price would come down here, and then you would trade this one, or you would wait for price to come a little bit lower to this one or this one. Okay, and so you're forced to focus on the real location of the demand and the supply. And so what you could do on this side of the chart, you could, if this gets well formed and price moves away, we move away, we hold, we come up, we poke up into this area here, form a wick into it, and we depart. Then you can trade that, but you can only sell on this side of the chart. We'll just extend the box a little bit. We'll extend that over here. Okay, so now it looks like that, more or less. Okay, so now you'll be allowed to sell here, but you're not allowed to buy here. Okay, because buying occurs at demand that is visible on the move up from the low to the high. Okay, and so what we're going to see in the demand side of the chart, the buy side of the chart, is we're going to see supply and demand being formed in different ways. Okay, we have the absolute low, which is here. So this is at the origin. This is important. Why? Because last time price came down here, from here to here, it left. What does that tell us? That tells us that there's a very keen interest to buy from this price point here. This is a very attractive price, because last time price was here, a load of people thought that it would be a good idea to buy. But on the way up, we had people getting involved with the market at these different price points. Let me remove these. We have this one here, just here, and what you can see here is liquidity exploration. Okay, so this is, I mean, the price goes up, and so the people who have the most money are looking to fill positions that are quite large, that are much bigger than my positions and possibly your positions. I don't know if you guys are trading with boatloads of money, but I'm certainly not. And so on this side of the market, they have to find a counterparty to their position. Not really, but they need liquidity available in the market to fill their positions at the most attractive price. So what they're going to do is they're going to be buying and selling. They have an intention to draw price higher, but they want to hide that intention from other participants in the market, because if they were telling us, if we knew that they were going to buy, then everyone would just start buying, and that would consume the liquidity available that would be required to fill the big players' orders. So what they're going to do, they know that a lot of the retail space, they're on the smaller time frames, and they are looking to buy and sell. Okay, and so when you see something like this, price race up, you know now that there's an interest to buy down here. So you know big players are looking to buy. Okay, but how do you continue to buy without other people also looking to buy? Well, then you do something called liquidity exploration, which is essentially a way for the big players to both buy and sell, or take on positions counter to their desire to, for example, buy, by moving price lower, giving the smaller players the indication that price is actually going to move lower. And this is what you can see just here. We have a small push lower just here. Okay, so price goes down, and this attracts smaller sellers. So they start to sell. They start to sell, have their stops up here, and they start to sell. So they're moving down, 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 down. And they put their stops above where we would traditionally see people putting stops over significant swing high if price is moving lower. And then what they do is they want to shake these people out of the positions so that they can buy up the liquidity in the form of other people's stops. So they'll do this, they'll onboard a bunch of people lower, because if you look at this here, this little move lower, I mean, that's a really big sell on a 1 minute or a 5 minute or a 15-minute chart. Probably a 5 minute and a 1 minute. That really looks like price is dumping. And we also have support, support becomes resistance, and so people are thinking, sweet, price is going to move down from here, but it's not. Price is testing it, and you can see that it's not, because if you let this unfold, you can see what is really going on. You can see that price has gone down, so we've onboarded some sellers. We have a big pool of liquidity here available for the big guys that are going to buy it up once price moves higher. And then they start to do this. Price goes up and we have higher lows. Then we have sideways price movement like this. And then price fires through, triggering all of these stops, releasing liquidity into the market that the big guys then reuse to fill their orders. And you can see that going on here. You can often see continuation patterns occurring at an area where the retail space will have their stops placed. And so you're going to, you see this going on here. Okay, all along here, loads and loads and loads of stops around here. And so price shoots up, we've dumped the liquidity into the market, and then what happens? Well, then we see price move sideways like this. Price goes up, we move sideways, we start to paint these white candles, and that means that we are beginning to fill positions. So we have a small push higher, price comes back down, we move sideways, start painting these white candles, and then the cannon explodes and price moves higher from here. Okay, and that is essentially what a continuation pattern is. A continuation pattern is a bigger market speculant re-entering the market or filling the remainder of their order at a very specific price point. And this point is important because we have this area here, which we had kind of support for price here. This formed below it. Once price left here, we managed to move from here all the way down. So anyone that was involved in buying from this point here, they had all of their stops flushed. Okay, and so you have to think, if price is going higher, you want to have a negative bias. If price is going lower, you want to have a positive bias. And this is really counterintuitive and confusing. It's really, really confusing. But this is what you want to have in the back of your mind. Okay, so if you have moving averages moving higher, you want to think, okay, it's time to start to identify an area of supply to sell at. If moving averages are moving down, then you want to say to yourself, okay, it's time to start to look for an area of demand to begin to buy. Okay, I know that it's totally counterintuitive, but that's essentially the way we need to think, because the big guys are buying when price is moving down, because the price of whatever it is they're buying is on offer. It's on offer at a discount, and when price is moving higher, they're looking to get out of their positions because it's at a premium. Okay, and so continuation patterns will often occur at a place where stops or liquidity is being dumped into the market. Okay, we have a similar thing here where we have highs here. Okay, price is moving sideways. People may be thinking that price is going to below here. We wouldn't be looking to do this because this is the beginning of a sell zone for this area just here, and we can't see what's going on because we need to look further this way. But what we can see is that price is moving sideways like this at a place where price is moving higher. Sorry, where price is respecting historical highs. Price moves sideways, we move up, we do this, then price cuts through, and then price comes back down. And then the guys who are looking to buy are filling their positions with the liquidity that is available as a result of the stops being hit at around these price points here. Good. Well, I'll try and keep this short. I won't go any longer. This is already running 20 minutes. But I hope this helped answer your question. If not, let me know, and I'll try and explain it in a different way. And if you have any questions, please dump them in the Discord channel or in the video. And again, thanks very much for watching.